Welcome to a special episode of the Tax Talk podcast. Jared Plon here as usual, putting together a solo episode. Fairly important topic that I wanted to bring awareness to before the end of 2023, and that is in regards to alternative minimum tax, or AMT, and some changes that have been put into legislation that are going to be effective January 1st of 2024. So what is AMT? How does it work? So traditionally speaking, individuals who have, some preferred income sources such as capital gains, employee stock options, dividends, things of this nature, along with certain tax shelters or credits. Maybe you have applied and used the capital gains exemption on the sale of a business or a piece of farm property. Maybe you are using an employee stock option deduction, things of these nature. What ends up happening is the government then requires you on a typical tax return to calculate your income via the regular method along with the AMT method. Usually what happens then is certain aspects of your income are then adjusted under the AMT regime, and you are then determined tax under the regular method as well as the AMT method. The result, whatever one is higher, is the tax that you end up paying in that particular year. If you are subject to AMT in a particular tax year, you have then 7 years with which to recover this tax after the fact. So it's important, if you're selling off a business or a piece of farm property, to have some income coming to you personally after the fact in order to recover some of this AMT. Not always an easy thing to do, but something to kind of keep in mind if you are going down that route. So what can we expect in 2024? So AMT typically is calculated on the federal side at 15%. That will be bumped up to 20.5%. Currently, the personal exemption is set at $40,000. That is going to be bumped up to $173,000. Now you say, probably a pretty good deal. And for some middle income Canadians, it is going to be better to have that personal exemption bumped up. Whereas, you might have sold a business in 23 versus 24, you might see some tax in 23, whereas you won't see it in 2024. Biggest thing also to then keep in mind is that there have been some changes to various inclusion rates as far as, capital gains exemptions, employee stock options, and then certain adjustments or deductions with respect to donations, interest expense, and various other credits that you may be applying in your tax return. So how is this going to impact charitable giving? I know we've had a lot of clients phone in here recently, specifically within the not-for-profit area, charities, and they're wondering what is going to happen with this AMT. Is this going to hinder some of our donations come 2024? I can't speak to that, but I can speak to the fact that there are some adjustments coming in with respect to that donation tax credit that would typically be applied at 100% within that AMT adjusted income calculation. Into 2024, you're only going to get credit for half of that. So depending on, your mix of personal income sources, you may see some tax payable with respect to a donation that you make in 2024 under the AMT regime where you wouldn't have seen that in the past. I just want to touch on a couple of changes to inclusion rates. So capital gains in the past, i.e. up into 2023, 80% of capital gains were included in adjusted taxable income. Into 2024, 100% of the capital gain is going to be included in that income calculation. So, your personal exemption goes up a little bit there, but some of these income amounts are going to be included at higher rates now as well. Dividend income, sometimes AMT will apply if you have some very significant eligible dividend payments, but typically not a huge concern if you're receiving, dividend payments. But moving forward, if you are receiving large amounts of dividends, especially eligible, and making some sizable donations, you could see some AMT be payable. And then lastly, looking at public listed securities and employee stock options. So currently the taxpayer will receive a receipt from the charity equal to the fair market value of any securities that they've donated. In conjunction to that, you are able to basically eliminate any capital gains associated with transferring those listed public stocks to a qualified charity. Going forward, 30% of those capital gains are going to be included in your AMT adjusted income calculation. So again, where you may not have presumed that you would be seeing some tax, you might see some tax going forward. And with respect to employee stock options, in 2023, half of the benefit that you received there was accounted for within the taxable income calculation. Into 2024, you're going to see 100% of that benefit included in your adjusted income. So just a number of places here, your personal exemption might be going up, but some of these income inclusion amounts are also going up, and then some of the respective credits are being deducted there as well. So very important to kind of keep these in consideration as we move into 2024. So now you say, well, if the legislation's coming, what can I do? What are some tax planning options that I can kind of put into place to maybe avoid having to pay some AMT down the road? Because I don't want to give Trudeau any more of my dollars. So one thing that you could definitely take into account, considering making a large lump sum donation in 2023. Easiest way to avoid the new legislation in 24 is just make that big donation before the end of the year, simply put. Next, AMT doesn't apply in the year of death, so it might be beneficial to sit down with your accountant, maybe your investment advisor, have a look at, some of these charities that you might be looking to, leave a legacy gift to, and delaying that big lump sum payment, to the point in time that you passed away. Have your will structured that maybe you're leaving some residue to a particular charity or charities, and then that way AMT is not going to bite you at that point in time. So consider AMT implications prior to making a large donation. So simply put, if we get into 2024, speak to your accountant. In the past, we've always told clients, make that donation personally. You're going to get a better tax credit for it. But going forward, if you have a small business corporation, it might be worth looking at, seeing if that donation is better made through the corporation now. Based on your income sources, is AMT going to apply? Maybe it doesn't, impact you. Even if you're a high wage earner and those income sources is coming from wages specifically, you shouldn't have to deal with any major AMT concerns there. So kind of in closing, this is kind of what happens all the time. We have changes to tax legislation that creep up all the time. I've noticed a significant number of them over the past year that are having a real negative impact on taxpayers, our clients especially. UHT changes to the AMT, and then coming in here towards the end of December here of 23 as well, are changes to trust reporting rules. So if you have a bare trust, you're going to be forced into filing a trust tax return and disclosing beneficiaries. So it's important to kind of stay on top of these things, making sure, specifically in this case, that you're getting full value for those donations. You're not leaving anything on the table. I always encourage you to reach out to Legacy Tax ahead of time, making sure you have a conversation with us to ensure that, if need be, some tax planning can be done ahead of time before you're making payments, via personal funds. Maybe it's out of the company, whatever the case is. We can kind of have a look at the whole picture and, determine what is going to be best for you cash flow wise, and what's going to get the most dollars into that charity, so you can keep working on that, legacy that you're working to build. So I think that kind of wraps up this podcast. Just a short highlight of some of the AMT changes. Feel free to check out legacytax.ca as well. There'll be a blog post there that will review some of these details as well. If you're looking for further information, feel free to reach out to us, 403-343-7707, or you can email us via reception@legacytax.ca. We would be happy to have a look over your tax affairs and give you some suggestions as to what to do going forward with respect to your donations and the AMT implications. Once again, Jared Plon here for the Tax Talk Podcast. Thanks again for tuning in. If you enjoy this content, if it is valuable to you, feel free to share it along to friends, family, co-workers. If you're on YouTube, feel free to drop a like there, hit the subscribe button. If you're listening to this on Apple Podcasts, please leave a review. That will help get this information out to more Canadians to better equip them come tax season. So, thanks again for watching. Take care, and we will talk soon.